The Economic Update with Tatiana Bailey.
In today's update, last year had a lot of economic disruptions, but which will carry into the year ahead?
Yeah, so right now, Dr. Bailey joins us with her look back at 2025 and what to expect this new year.
Given that we are now at Stardate 2026, yes, a Star Trek reference, I'd like to share my thoughts on where I think the national and local economies may be this year and next. Forecasting is always tricky in economics with so many variables, but this is especially true right now with transformative innovation, a massive demographic transition, a seemingly smaller opportunity set for younger and poorer Americans relative to past decades, and political polarization and hatred between fellow Americans threatening the tenets of life, liberty, and the pursuit of happiness. All of this colors my projections for 2026 and 2027. The 2025 Q3 GDP, or gross domestic product release just before Christmas showed an outsized increase with an annualized growth rate of 4.3% and a year-over-year rate of 2.3%. I pay more attention to the year-over-year rate because the annualized rate is taking one quarter and assumes an annual growth rate based on that one quarter. 2025 had more disruptions than usual, so using the annualized measure is particularly misleading. But either way you look at the data, historical trend growth is around 2%, so I would normally rest easy. However, I believe the drivers of that growth are not structural and therefore not sustainable. First, tariff-related import distortions produced a contraction and then rebound in quarterly GDP last year. Second, AI-related investment was the primary driver of stock market and GDP growth in 2025, and any economist will tell you diversification is a linchpin to sustainable growth. Third, consumer spending has held up, but savings rates remain low at 4.7% versus the usual 8% trend. Credit cards are increasingly being used for necessities. While headline inflation eased to 2.7% in November, price levels remain about 30% higher than in January 2020, which is what consumers now find most egregious. Aside from gasoline prices, the majority of other prices continue to show pressure. 1/3 of producers say they raised prices in November, and another third plan to in coming months. These cost pressures have dampened hiring. Even manufacturing, with the current emphasis on reshoring, had employment levels decline by 73,000 jobs over the past year. With prices still elevated and the labor market softening, consumption may sputter in 2026. Statewide and locally, we have far fewer people moving to Colorado, and that's impacting job growth. Pre-pandemic, Colorado had an average annual growth rate in employment of 2.2%, but last year it was only 0.6%. Even more pronounced was our county's lackluster job growth, with only 2,000 new jobs in 2024 and a decline in employment in the second quarter of 2025, as shown on the graph. There are positives. In 2026, we will have some tax relief, lower interest rates, and a continued leveling off of local housing prices. On that note, I wish you and yours a truly wonderful 2026, full of life, the liberty to pursue what you want and work for, and abounding fulfillment in your pursuit of happiness.